Yeah, I think the prevailing trend is the one where large cap outperforms small cap, market cap weight indices outperform equal weight indices, and growth stocks do better than value. That's like the real trend. But then we had this massive counter trend rally where it was just the opposite. And I think that was important for the market to have that catch up in a lot of the names that have just been so substantially trashed. Make big moves to the upside, see some excitement about some companies that aren't based in Cupertino. And that's fine. But again, the prevailing trend, the real trend, is taking hold again today. And even the stay-at-home stocks are rallying again. So it almost feels like it's blue team, red team. And so let's say blue team is where people have really made the most money, and then red team makes money occasionally when they do those counter trend trades. But I do think we had a 2-month bubble in day trading activity. I don't know if it's over yet. It feels like it's bursting a little bit in some of the give back that we're seeing in the names that were most associated with it. But a lot can happen even between now and the close. And 1,000-point days in the Dow are not that rare this year. So today looks like it's something special and different. It might not be.
Yeah. Anastasia, it was easy when stocks were going up unabated every day, right? Now the work gets a little more difficult. To Josh's point, you look at some of those so-called epicenter stocks. That's the term that Tom Lee had coined. These tremendous gains over the last month in names like Boeing, up more than 40%, and many of the airlines which have had just astronomical gains, the cruise ships, the banks, other areas that we're going to benefit from a fast opening economy. And maybe today is a reality check that says, you know what, Jay Powell threw water on that yesterday. You almost had like a Larry Kudlow versus Jay Powell market. And the Kudlow market was working for a good while because there was this thought that it was going to be a V recovery in the economy. Jay Powell yesterday all but said no way.
Yeah, Scott, I'm not so sure that it was necessarily a trade for the second half of the year and the V-shaped recovery. I think it was really the reopening trade that was working so well. We went from being in a digital lockdown for a couple of months to starting to venture out into the real world. And I think that's what some of those social distancing underperforming stocks like hotels and restaurants and airlines were responding to. So this was been playing out, and that's why they've been rallying. At one point, we had a basket of social distancing underperformers that was up 60% or so quarter to date. So I would agree that they have done a lot of the rally to kind of, to coincide with the reality of the reopening. But this is why I think they're absolutely due here for a little bit of a pause. And this is not going to be a straight line recovery here by any means. I will say maybe after this little bit of a pause, I do still think that there is a trade to be had for consumers that are venturing back out into the economy. We see this in restaurant data. We see this in mobility data. We see this in gasoline stations. We see this, for example, in transactions where the card is present that suggests to us that consumers are venturing out. So after this little bit of a pullback, I think if we can be discerning about the type of pent-up demand stocks that we want to own, I think that's really the trade for the remainder of the summer.
You don't think, Anastasia, that trade already happened? I mean, that's a reason that these stocks came back to the manner in which they did, right? Banking on exactly what you just said. So what's left?
Yeah, well, look, they have come down, but if I look at the underperformers, they're still lagging some of the tech outperformers by 40-50% in certain cases. A lot of the names are still down pretty significantly year to date. So the reason for the sharpness of the rally is because we're starting from such a low point. But more fundamentally, the reason why I think the reopening trade has to focus on the consumer is because we'll take a look at the personal savings rate. It is now at 10%. Take a look at last Friday's was a jobs report where we've seen some positive momentum in jobs data. And by the way, some of the alternative data suggests that we could see something similar for the next several months. And you couple this with consumers that want to venture out, that maybe are starting to think about what's going to happen in Q4. Are we going to be in a second wave, going to be locked down again? So I think the pent-up demand, the ability, the means to spend, all of this should continue to power some of the consumer services stocks.
Okay.